EOS is a cryptocurrency built on blockchain technology, aiming to revolutionize how we interact with digital assets and decentralized systems. Launched in 2018, EOS set out to address some of the biggest challenges facing earlier blockchains, like slow transaction speeds and high costs. It was designed for speed and scalability, allowing for rapid processing of transactions and supporting a high volume of users at the same time. This makes EOS stand out in a crowded field of cryptocurrencies, where performance can make or break a project's success. Think of it as a digital platform for building decentralized applications, much like an app store for blockchain. Developers can create games, financial tools, and social networks that run on EOS, all without relying on a central authority. Its main appeal? Handling thousands of transactions per second, making it attractive for businesses and developers who need efficiency and low fees. This capability opens the door for real-world use cases, from microtransactions to enterprise-level solutions. Investors watch EOS hoping its value will rise as adoption grows, seeing it as a potential leader in the next wave of blockchain innovation. The more people and companies use EOS, the more valuable the network and its token could become. Meanwhile, developers see price as a sign of network health. A strong price can signal confidence in the technology, attracting more talent and resources to the ecosystem. EOS made headlines with one of the largest initial coin offerings ever, raising billions and building a dedicated community. This massive fundraising effort put EOS in the spotlight and set high expectations for its future. Even when prices are low, many keep an eye on EOS looking for signs of a comeback or new developments. The project's history of innovation means that any update or partnership could spark renewed interest. Price movements, especially sudden ones, are closely watched for clues about the project's future. A spike might hint at big news, while a drop could signal challenges or shifting sentiment. In a crowded crypto market, price is a quick, if imperfect, way to gauge relevance and sentiment. It's a snapshot of how the world feels about EOS at any given moment, compared to hundreds of other coins. When EOS makes a big move, it sparks curiosity. Is this a random blip, or the start of a real recovery? For both investors and developers, watching EOS means staying alert to the next big shift in the blockchain world.
On November 25, 2025, EOS surprised the entire crypto world with a sharp and unexpected 10.42% price jump in a single day. The sudden surge caught both casual investors and seasoned traders off guard, as EOS had been relatively quiet in the weeks leading up to this event. The price soared to 35.4 cents by 8:01 p.m. GMT, marking its biggest one-day gain in recent memory. For many, this was a level not seen in months, and it quickly became the talk of trading circles and online forums. What made this surge even more remarkable was the complete lack of any major news or official announcements from the EOS project itself. There were no new partnerships, no software upgrades, and no regulatory developments to explain the sudden price action. Instead, the move seemed to be driven purely by a sudden shift in trader sentiment, or a burst of buying activity. Some speculated that a large investor, or whale, may have entered the market, triggering a wave of follow-up purchases from retail traders. For a coin that had been relatively dormant, this was a dramatic and unexpected break from the norm. The spike injected new energy into the EOS community, with many wondering if this could be the start of a longer-term rally.
The 35.4 cent level quickly became the new focal point for traders, serving as both a psychological barrier and a potential launchpad for future gains. It represented the day's bullish peak, and for many, a sign that EOS still had the potential to surprise the market. A 10% daily gain is significant for any asset, but for an established coin like EOS, it's a clear signal that volatility and opportunity remain. Such moves often attract new attention from both investors and analysts. The move put EOS back on the top movers lists and reignited discussion across social media and trading platforms. Was this a sign of renewed investor interest, or just a short-term spike driven by speculation and momentum? Even in the notoriously volatile world of crypto, such a dramatic jump for EOS was hard to ignore. It left traders and analysts alike watching closely, eager to see what would happen next.
To understand the surge, let's look at the numbers. EOS traded in a tight range, from 35.2 to 35.4 cents. Once the price jumped, it held steady, showing strong support at the new level. The day closed at 35.4 cents, a key benchmark for traders. A strong close like this often carries momentum into the next session, boosting investor confidence. Technical analysts see closing at the top of the range as a bullish sign. The 10.42% gain meant a $1,000 investment at the start of the day would be worth about $104 by the end. This was the largest single-day gain for EOS since November 22nd, signaling increased volatility. The surge wasn't an isolated event, but part of a series of volatile days for EOS. Something was clearly stirring in the EOS market, prompting traders to pay close attention.
Zooming out, the 10% surge was just one chapter in a volatile week for EOS. Despite the daily gain, EOS had lost 13.51% over the previous 7 days. The price swung between 30.27 and 69.56 cents, a huge range. The surge to 35.4 cents was a partial recovery, not a new high.
This context shows the roller coaster nature of crypto. A big daily gain can follow a steep decline. Traders who bought high were still in the red, while those who bought near the lows saw quick profits. The contrast between daily gains and weekly losses highlights why timeframes matter in crypto analysis. For EOS holders, the ride has been anything but smooth.
Trading volume is key to understanding any price move. It's not just about how much the price changes, but how many people are actually participating in that move. Volume acts as a kind of truth detector for price action, helping us separate genuine momentum from short-lived spikes. When you see a price jump, always check the volume, because it tells you whether the move is being supported by a crowd or just a handful of traders. EOS saw $1.166 million in volume during the surge, a modest figure for a major coin. Compared to the billions traded daily in top cryptocurrencies, this number is relatively small. It suggests that, despite the price action, there wasn't a flood of new money or widespread interest driving the move.
High price moves on low volume can be fragile, as they may not reflect broad market conviction. In other words, if only a few people are buying, the price can move quickly, but it's also more likely to reverse just as fast. This kind of action often signals caution for traders and investors. The low volume suggests the jump was likely driven by a small group of traders or a few large orders. This means that the price could have been pushed up by just a handful of big players, rather than a broad base of support from the market as a whole.
A price surge on low volume can mean the rally is weak, or that sellers have dried up, making it easier for buyers to push the price. Sometimes it's not that there's overwhelming demand, but simply a lack of resistance. This can create sharp, sudden moves that may not last if more sellers step in. For investors, this should be a caution flag. The move may not be sustainable without more participation. If you're thinking about jumping in, it's wise to wait for confirmation that more traders are getting involved, which would show up as rising volume alongside price.
It wasn't a market-wide rush, but a localized event within EOS. The rest of the crypto market didn't follow, which is another sign that this move might not have staying power unless broader interest develops. Sustained gains need both price and volume to rise together. When you see both moving up, it's a sign that more people are getting involved, and the trend could have real strength behind it. Watch for follow-through in the coming days to see if this is the start of a real trend. If volume picks up and price continues to climb, that's when you know the move is gaining real traction. To put things in perspective, EOS once hit an all-time high of $22.98 in April 2018.
Back then, EOS was a top 5 crypto with a $17.5 billion market cap. Today, at 35.4 cents, EOS is down over 98% from its peak. An investor who bought at the top would now have just $15 to $40 for every $1,000 invested. This massive drop explains why even a 10% daily gain is met with both excitement and skepticism. For long-term holders, small jumps are minor steps on a long road to recovery.
The all-time high is a psychological benchmark, reminding everyone of both past potential and lost value. EOS's story is now a debate: sleeping giant or failed promise. To gauge EOS's surge, let's see what the crypto giants were doing that day.
Bitcoin traded at 80,700, down 0.27%, showing no strong upward momentum. Ethereum was at $2,951, up just 1.01%.
The calm in Bitcoin and Ethereum made EOS's 10.42% jump stand out even more.
This is called altcoin divergence, when a smaller coin rallies while the majors are flat. It can happen due to project-specific news, targeted trading, or capital rotation into riskier assets.
In this case, the lack of big news points to speculation or a shift in trader focus. EOS's move was an outlier, sparking fresh analysis and debate. When the leaders are quiet, a big move in an altcoin is always worth a closer look. For everyday investors, a sudden 10% jump in EOS is a lesson in crypto's volatility.
Even coins that seem dormant can spring to life, creating both risk and opportunity.
Such moves can renew interest in a project, prompting new research and discussion.
Headlines about big gains can attract attention, sometimes fueling further rallies.
For those with a small EOS position, the jump was a nice boost. For overinvested holders, it's still a long road back.
The event underscores the importance of diversification and risk management.
It also shows that sentiment and speculation often drive prices more than fundamentals.
Markets aren't always rational. Understanding this can help investors avoid emotional decisions. The EOS surge is a reminder: stay analytical, not reactive. After a sudden surge, the big question is, what's next for EOS?
The bullish scenario, continued buying and rising volume could signal a real recovery.
More likely, EOS may consolidate, trading sideways as the market digests the move.
A pessimistic view, the rally fizzles and the price drops back below 32 cents, erasing gains.
The future depends on broader crypto trends and any EOS-specific news.
Watch trading volume closely. A rising price with rising volume is bullish. Fading volume could mean the excitement is over.
The next few days will reveal if this was a fluke or the start of something bigger.
For now, EOS is back in the spotlight, and the market is watching. Whether it's a comeback or just another blip, only time will tell. Stay tuned.